Welcome to the latest Motley Fool scoreboard. I'm on Chocolate. We've got longtime fools, Matt Frankel and Lou Whiteman, giving a 1 to 10 rating to a Moneyball wreck. It's Upstart, ticker symbol UPST. We'll rate the strength of Upstart's business first, including factors like industry and competition. 10 is invincible, 1 is hopeless. Both of you are at 7s, Lou.
Yeah, so the premise here is very simple. They're using AI, or they used to call it machine learning, to analyze over 70 data points and provide an individualized assessment of a person's likelihood to pay off a loan. Upstart then uses the model to facilitate personal loans, auto loans, HELOCs, all sorts of things, mostly for bank partners, or ideally for bank partners, keeping some in-house and kind of farming other loans to others. There's a real need here to disrupt the FICO score. We shouldn't just all be in buckets. We can do better than that. There is a real opportunity here. The existential question is, does it work? So far, so good, but we still need a real downturn to test it. I'm cautiously optimistic at a 7.
Yeah, I agreed with a 7. Strong progress, especially recently. They reported record high revenue in 2025, even higher than that COVID era lending surge. And the business is nicely profitable again after hemorrhaging money for quite a while. The model, like Lou said, seems to work. They've been able to get some of their loans off the balance sheet, which has been my biggest concern of the business, but there's still work to do there. And I am not completely sold on the plan to get a bank charter and build the first AI bank from the ground up. I'm not sold on that plan. It could be a home run if it's successful, but the model's been to originate loans for third-party partners. It seems to be working, and this adds a lot of risk to it. So that's why I didn't give it a higher score than a 7.
I think I say it every time we talk Upstart. We need a full credit cycle to even, really get a good feel for how Upstart does in the good and the bad times.
100%, yeah.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Matt's at an 8. Lou, you're at a 7.
Yeah, it probably would have been an 8 if not for this transition, but there is a transition going on here. I think David Girouard has done a great job as CEO. I'm sorry to see him go. He remains executive chairman, and his replacement is a co-founder, chief technology officer, Paul Gu. Occurs to me, I don't know, would Paul have... I mean, he didn't get the job originally. Maybe he's grown into it, maybe. But, I don't know. I like this in concept, but we'll have to see if it works in actually execution. Look, Upstart's a bigger company now. I kind of like the transition to a new CEO, but I kind of would love it to be maybe an outsider. So, just a tiny bit of questions, but still a really solid 7. These are smart people who have done a good job, and I don't want to be dismissive of that either.
Yeah, well, Paul was like 20 when they founded the company. That's why he didn't get it initially. I think he was still in college. But if you believe in this as a tech company as opposed to a banking or financial services company at its core, there's not a better person to take the reins. Like Lou said, he's been chief technology officer since day one. He's the co-founder of the business, and he's made it clear that he believes in this. The stock is cheap. He made a personal investment. He's been talking about buybacks, and he's really doing a great job of investor confidence. He has lots of skin in the game. He's untested as a CEO. That's absolutely true. But I mean, I can't say anything really bad about Upstart's management to this point.
For financials, a 10 is a fortress, a 1 is yikes. Things fall apart a little here. Matt's at a 5. Lou, you're at a 6.
Yeah, I think Matt and I, between us, we've already kind of talked about what's going into these scores. The good news is they returned to profitability in 2025. Originations up 86%, revenue up 35% in the most recent quarter. But look, there is almost $2 billion of debt on the balance sheet. They're still holding a lot of the loans they're originating. I am not scared of that, but it is suboptimal. And I think it should factor into the score. Given where the company is, I think these financials are good enough, but I am grading on a curve of they need to get better. Not a reason to panic, but a 6 is as generous as I can be.
Yeah, I give it a 5. It's my weakest score of this whole thing. I mean, the loans on the balance sheet scare me, and not because I'm expecting widespread defaults or anything like that. But if they're having a tough time getting loans quickly off their balance sheet now, what's going to happen when they 2x the business, 3x the business, and so on? Are they going to start carrying billions of dollars on the balance sheet? Is that why they're starting a bank? A lot of unanswered questions financially for me.
All right, Matt, let's move on to valuation. How well will Upstart stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I say 15% plus, the highest of our choices here, but with a safety score of 5. The stock is cheap. That's it's pretty undeniable right now. It's at its lowest price to sales ratio it's ever been as a profitable company. The lowest price to sales ratio it's been since 2023 when it was losing money hand over fist. If Upstart can continue to grow, especially in its newer auto loan and home loan verticals, and can continue to do so profitably without taking on what I would consider outside risk, it could be a home run. There were a lot of ifs in that statement. There are a lot of unanswered questions, especially regarding the banking plans and how, like you said, on how it would perform in a real recession, which it hasn't really seen yet.
Yeah, so I'm with you here. I'm 15% plus, basically for the same reasons. It's not quite binary, but it feels pretty binary. If this all works out, the stock is cheap and there's huge potential. But my safety's down at a 3 because I've seen enough to be optimistic, but I don't think we know. I'm a little more positive on the banking side than Matt is. I think Matt did a good job articulating the kind of traps there, but it's also a potential cheap source of funds to kind of support this too. So we'll see how that works out. Basically, if it works, it's wow, but there's a real chance it doesn't work.
I think binary is a great term here because they're kind of going all in on all the things. They're trying to disrupt FICO. They've got their CTO rising to CEO. They've got a banking charter. They're either working or they're not working. And we have yet to see the full credit cycle. Thank you to both Matt and to Lou. They've given Upstart an okay overall score of 6.8 out of 10, reflecting all those variables. Neither has a top it, though, and both Matt and Lou own shares of Upstart. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Shopify. Till then, Fool on.